Okay, and let's say you've turned $100 into $1,000, and now you're waiting for the bear market. I will guarantee you will not put the same amount back in because you'll be terrified of losing it. And what you'll end up doing is sizing the position much smaller than you would have done. And you play with the negative psychology of, I don't know when to add. And before you know it, you've actually screwed the whole thing up. When if you'd have kept it and added, it would have been better.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision co-founder and CEO Raoul discusses the crypto banana zone breakout. Raoul also explores the biggest narratives and drivers of digital asset prices and more. So without wasting any time, let's dive into the video.
So that's one thing I think most people don't realize is it could be easy to take profits, and like I did in 2017, you don't have regrets even if it goes up more. The hard thing is actually putting the same amount back in again. It's a real psychological problem. So think that one through. I don't like that way of doing things. I think everybody's trying to be too cute. Here's my suggested path for most people, and maybe something I will do this time myself, is we don't know what the cycle peak is going to look like. We don't quite know when it's going to be. We do know it would be crazy early if it finished this year. Usually the back part of the year after the US election, there's usually a screaming pump into the end of the year. So my advice is use that in terms of time and not price. And take maybe a third off the table for lifestyle chips. Okay, now you can buy your car or your house if you're lucky or whatever it is, or some extra savings, right? Take some money out of crypto land, put it into fiat world where you live, secure your lifestyle, the things that matter to you. Right, now you've taken all of the pressure off. You've done it via time and not price, which is towards the end of the year, I'm going to take a third off. I don't really care what the price is because it will be up a lot. So I'm just going to take it off. And then now I've de-risked my life so I can now run 2025 more intelligently. So 2025, you can then run with the rest of the money that you've got, the 2/3 remaining, and you can say, okay, I'm going to take some off by about the summer if I wanted to take more off. Maybe you don't. Maybe you just run the rest because you've now de-risked your lifestyle. That's my favorite approach. But what I would have a tendency to do is if we do get a mega pump, the 2013-17, then take another third off when that happens. If it doesn't and it gets stunted, it doesn't matter. You've taken a third off, you've protected your lifestyle, and then you can then buy some cash with that. If you keep that cash, you can buy the dip, or you use it to, as I said, for your lifestyle chips. But this way, you're now ready for whether it stops early. You don't care because you've taken your money off the table, but you're still in the game. Right? That being in the game is the secular trend. That's the most important thing to me. But if it really goes wild, you take a bit more off and you can put it into the lifestyle chips bank. And then you've still got a position. Because if you don't have a position in the secular market, I think you end up making suboptimal choices.
The crypto community is filled with speculation and expectancies as the SEC speeds up the review of spot Ethereum ETF. We explained how the approval of Ethereum ETF would greatly impact Ethereum and the wider crypto market. In May, the crypto market priced in denial and even the possibility of Ethereum being labeled a security. However, the odds have changed with the speculation of ETH ETF approval. Bitcoin price surged above $70,000, while Ethereum saw a double-digit rally, surging above $3,500. The Ethereum ETF approval odds have significantly increased, with Bloomberg analysts Eric Balchunas and James Seyfarth boosting their probability estimate from 25% to 75% in the final hour. The ETF approval can significantly impact ETH's price. While Bitcoin's market capitalization is $1.3 trillion, Ethereum's is just $376 billion. making it much easier for Ethereum to surge in price. Additionally, there isn't that much ETH available to buy. The current supply on exchanges is at an all-time low of just 9.9% of the total supply. Unlike Bitcoin, Ethereum has no miners, adding supply to the market. Since the Ethereum network transitioned to a proof-of-stake mechanism, ETH has been deflationary, reducing the supply. Many people hold ETH in different ways, such as staking, farming, using it as collateral, or for decentralized finance (DeFi) activities. Because of these factors, very little ETH can be easily bought to meet the potential demand from traditional finance (TradFi) investors. Even if the inflows into ETH are not huge, they will still greatly impact its price. Additionally, the approval of an ETF and the surge in ETH's price can fuel a major altcoin rally. Solana, Avalanche, and many Layer 2 altcoins will see a major rally in the coming days.
So that's how, now you might not say a third, maybe it's 50% for you. It doesn't matter. What I'm trying to give you is an idea of not trying to nail the top, trying to think in terms of time zones, and then how much lifestyle chips de-risks your life. Because I think it's too important a trend to this up. So that's the best advice I can give. I will probably do the third off strategy this time around because I've got some lifestyle stuff I want to do. I did not last time, and I was bloody happy with not doing anything but buying the dip. I will absolutely buy the dip in 2026 because this trend is going to keep going. Remember, 2.5 trillion to 10 to 15 trillion. 15 is the pump. The 10 trillion should be normal to 100 trillion. That's the game we're playing here. Let the cyclicality be your friend. Understand that there are seasons that you can use to your advantage. We are transitioning right now, and I'm talking to you, this is Sunday the 12th of May, I'm recording this. We are just transitioning where we're about to hit crypto summer. And that usually happens June, July of the season cycle. And then it goes bananas. Of course, there will be corrections and there will be sharp corrections. 30, 40% can happen. But it usually goes up into the banana zone from here. That's when you've got to be careful not to lose your mind and fuck this up doing other things you shouldn't be doing, like putting all your portfolio into meme coins because they're going up the most because you want to maximize profit. Think of this as a longer term game. You'll make plenty of money if you stay with a secular trend in the big tokens and have a small amount to play in the other stuff.
Bitcoin traded above $70,000 on May 21 after relentless bidding produced snap BTC price upside. Bitcoin surprised into the previous daily close, with repeat lots of buy liquidity boosting the market to nearly $72,000. One bold prediction even saw $100,000 as the outcome after a breakout completed on weekly timeframes. Popular trader skew suggested that the United States Spot Bitcoin Exchange Traded Funds, ETF, could have had a hand in the move, predicting important days to come in the run-up to the decision on the U.S. Spot Ether ETF. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.